So, hi everybody. Last week I presented a stock named SN Microcell, and that stock basically had all the good ingredients of a fundamental strong company. A very strong balance sheet, positive operating cash flow. Company had never made any losses, and zero debt. The growth triggers were quite visible. The company which I'm presenting today is a complete opposite of that. It doesn't have a good balance sheet. The company is loss making. There is too much debt. The company is even not even able to pay its interest payments, and that's why I have this quote here: in markets, despair is temporary, but assets bought in despair often aren't. So we will look. I will just give you a brief overview of this company. This is the screenshot from screener. So you can see the market cap here is 2,000 crores, roughly 2,000 crores. Okay, ROC is negative, ROE is negative. Okay, ROIC is negative, current ratio and return on assets, everything is basically below par. Okay, and even if you look at the interest coverage ratio, so they are not even able to make the interest payments on whatever the profits they are making. So why look at this company? Okay, so I want to refer to something what refer to concept of something what Mithun referred to last week in his presentation. Okay, he talked about buying the pessimism. Okay, so this company fits exactly into that concept. Where we are trying to buy the pessimism and by looking into the future, what the future might be. So I request everyone, since Puneet Bhai has uploaded the recording as well, to just review whatever Mithun said in that about the concept of buying the pessimism in that video. And I would just like to add a couple of points. When you're buying the pessimism, you need to be absolutely sure about two things. One is that the capital allocation of the company, whatever the capital allocation decisions the company and its promoters are making in the future, let's say the future profits or any incremental fundraise they are doing, or whatever money that is coming in, what are they doing with it? You have to be absolutely sure about that when you're buying something doing a pessimistic phase. The second thing is also, you need to be absolutely sure that there would be no further huge debt raise or huge promoter dilutions after a certain point of time. Okay, okay, and I will not I won't keep this presentation in the presentation mode only. From in between, I will take you to the screener as well to show you some numbers which I have not highlighted in this presentation. Okay, so the stock is Veranda Learning. It was founded in 2018, and it basically provides services in the education sector. So it has the biggest around 300. It has coaching centers in more than 300 cities. They also do managed schools where they take over the schools, certain departments of the schools, and they provide education there. Same thing they do for the colleges as well, and they also provide vocational education. Vocational is basically upskilling and upskilling types of courses for professionals from IT industries and every other industries basically. And these are here all of the brands where under race hired, all you can see. Okay, there are more brands which they have which they have, but since I have to fit it in this PPT, I have only mentioned this many. Okay, these are all the brands, and every brand is actually is addressing a particular niche. Like if you see Veranda Rice, it operates in the government test prep. Veranda Higher Education is higher education and foreign education. Okay, JK Shah classes is particularly for CA coaching. Likewise, every brand is addressing a particular niche and no addressing a particular niche or a particular or is operating in a particular geography. Here is a brief snapshot of the company. So it was started in 2018. Okay, and right from 2018 itself, the way they have gone through is by making inorganic acquisitions. Okay, so they started off in December 2020. They acquired a company called Race. They rebranded it to Veranda Race. Okay, and 2021 same thing. They acquired two three more companies in 2000. 22 they acquired JK Shah classes, which is the famous CA coaching classes. Okay, and in 2024, within FY24 itself, they acquired 9 more companies. So right now their strategy, which is what I refer to as Veranda 1.0. In Veranda 1.0, their strategy has been to go through inorganic acquisitions. Okay, but these acquisitions have come at a high cost. Now I will take you to the screener to show you some numbers here. So if you look at the balance sheet right from 2001, look at how much the borrowings have grown. Okay, we were at 7 crores of borrowings and it went up to 500, 600 crores. So all these acquisitions were made through acquiring debt, and debt at a very high cost of interest, almost at 16, 17% rate of interest. Because since it was a very small company, banks were not ready to lend, so they had to go to the AIF route to lend, to get the money, or the NBFC route to get the money, which was at a very high rate of interest. So all of the acquisitions have come to use debt. Okay, but one other thing is, while making these acquisitions, what they have done is they haven't they have acquired all profitable and established brands. Okay, which have a good record of giving out profits, and which are well known in the particular geographies. And what other thing they have done is they have retained the management of the original company, which from whom they have taken it over. Let's say JK Shah classes, which was owned by Professor JK Shah himself. They have retained his management and his and his operations. Okay, and they have gone that way only. So they have not tampered with the operations of any of the brands that they have taken over. They have just got it under their wing, and they started providing tech support, and growing that brand into more geographies, or by adding more courses to it, providing multimodal learnings like both offline and online, and hybrid and a hybrid model as well. So those particular brands, were limited to a particular geography, or to providing only a certain number of courses. Their bandwidth also expanded by coming under the domain of Veranda. A few examples of what they have done with the previous brands. If you look at Edueka was primarily an online brand. Okay, what they did with Edueka was they shifted it to an offline mode as well. So they opened offline coaching centers under the brand Edueka as well. Grace, which I previously mentioned, is a government test prep coaching. It was only in offline in Tamil Nadu. Okay, and what they did was they expanded their portfolio beyond a certain exams. They also included like railway equipment and Tamil Nadu State Commission, like that. And they also took that race brand to an online mode as well. So students who can't appear offline, so they have the option of online mode as well. Now JK Shah is their flagship brand. Okay, and JK Shah previously, before the Veranda acquisition, they were only providing CA coaching. Now, when Veranda took it over, they expanded their portfolio and made it a complete commerce coaching institute. Okay, like starting from BCom, they also cover courses like company secretariat. Okay, CMA, CPA, CFA, and everything that comes under the commerce domain. And going forward, they want to expand JK Shah's geography beyond. Right now, it's only operating in Gujarat, but going forward, they have plans to expand it into Rajasthan and Maharashtra as well. They also have 4 residential centers where they provide tutoring and education services to students, and as well as a residential stay. Now, we looked at Veranda 1.0, where what they did was they accumulated a huge amount of debt and grew inorganically. Now, let's say in Q3 FY24 con call, what they suggested was they had just two more acquisitions pending, and once those were done, they are launching a Veranda 2.0 strategy, which is the the main objective of the strategy is now they will not do any more inorganic acquisitions, and they will only look to go organically, and try to give give all the brands the synergistic benefits. Okay, so when they are talking about not doing acquisition, okay, so that also means that they will not be acquiring any more debt and not be taking and not be diluting any more equity. Okay, so I will just take you to the screen once again, and I will show you here. If you look at the shareholding pattern, okay, you can roughly see that they have diluted a lot of their equity. So what they did recently was they raised a QIP of 356 crores, and out of the 356 crores, they paid out 310 crores of debt, debt from that QIP. Okay, because it's sort of very balance sheet heavy, and they were not able to meet the interest as well, interest costs as well. So if you look at the quarterly results here, you will find, okay, up until March 2024, if you can see, March or even December 2024, you can see the interest payments per quarter was 30-40 crores, which was almost double than the EBITDA they were making on that business. Okay, same wise depreciation was quite high as well, but in the interest cost itself was more than the EBITDA they were making. So, and that's why they decided to do the quip, and get rid of some of the high cost, as I also mentioned that it was a high cost debt at 17%. So out of the 356 crores QIP, 310 crores was used just to pay off the debt, and other was used for some working capital management. Now under Veranda 2.0, some of the other plans that they have is, they right now they are primarily based, other than the JK Shah, which is the flagship brand, most of the business is primarily based in South India. Okay, Hyderabad, Bangalore, those sides of region. Okay, now they are planning to expand their geography to basically become a pan India brand slowly going forward. And going forward, they also plan to go via only an go via only an asset light model, wherein let's say they will go via franchise model, wherein the property will be owned by someone else, and they will only operate their brand. Okay, and when if they, let's say if they manage a school, so the school will be owned by some private owner or by a government or by the trust, and they will just provide their educational services there. In Q4, they have a plan of restructuring their debt, their current debt of 190, which is 195 crores right now, the long-term debt, out of which 120 crores is at a very high rate of interest, which is 17.2%. Okay. Now in Q4, they are planning to refinance that debt at a much lower rate. Okay. Hopefully through some bank. And there is also a special situation on the cards here where they are demerging their commerce vertical, which is the JK Shah, and some other 4-5 other brands are there, which we'll discuss in the future slides. Okay, so they are demerging that business, and that business is the crown jewel kind of thing. That business is generating like 50% of their revenues, but 80-90% of their EBITDA. So they are demerging that business, which hopefully should create a lot of value. So here are some, basic details about the demerger, about the commerce division which they are going to demerge. So when I told you in the last slide that out of the 350 crores, 310 crores was only used to pay down the debt. So what they did was, okay, after most of the debt was paid down in the commerce division only. So now their commerce division, which is going to get demerged, will be a debt-free entity post the spin-off. It will be completely debt-free, and and it will be a high cash flow generating business. Okay, so with that cash flows, they can grow this business, in an organic banners, and use those cash flows to maybe start giving out some dividends and all that things. Uh, They plan to take this commerce division beyond, beyond, as I said, beyond Gujarat and to some other geographies like Madhya Pradesh and even the Delhi North India side. And for the commerce business, they are projecting like a huge growth, 35 40%. So one of the things which they mentioned in the con call, as you can see it in the screen now, is that many very large GCCs are getting opened in India. And the GCCs, what the basically the management is saying, the GCCs are not only related to the software work. Okay, GCCs are also being opened for back office audit and accounting work as well. So the cost, so the cost dynamics which are there in the US, when you compare US to India, the cost arbitrage, same thing which played out in the IT industry, the management is envisaging the same thing can play out in this accounting and audit industry as well. So what they are projecting is there will be a huge need as this GCC starts scaling. There will be huge needs for accountant and back office audit work and everything like that. So people will need a lot of like coaching in the commerce vertical. So that should drive their growth in the commerce vertical. That should be one of the main pillars for the growth in their commerce vertical. This is a highlight of their, which, as I said, JK Shah is a flagship brand, and these are some of the highlights of the JK Shah brand. It is a 42 here in this presentation. It's mentioned 39 years, but now they have completed 42 years. It's a 42 years of brand running in Gujarat, and Professor JK Shah is the founder of JK Shah classes. It's running. He and his two children are running those classes themselves. Okay, some some marquee alumni. If you look at the JK Shah classes, you can find here Kumar Mangalam Birla, Piyush Goyal, okay, Nilesh Shah, the MD of Kotak AMC. All these have been tutored by JK Shah himself. So this is a very well known brand in the commerce vertical. Okay, and this is the main, like I said, the main the crown jewel out of all their brands. Now they have also, what they have also done is divided their business into four different segments. This is the main is the commerce segment, which is soon going to get demerged. It also holds some other brands like Tapasya. Tapasya is basically managed colleges. So what they do is they go to a college, they take the commerce vertical under their wing, and they provide commerce education under that Tapasya brand. So going forward, they want to grow this Tapasya brand as well. Right now they have 15 colleges in the Tapasya brand. They want to grow it to more, to many more managed colleges in the next 4 5 years. Their plan is to go to almost 100 colleges, 100 managed colleges. Okay, then there is the academic segment. Academic segment is basically the K12 means schools from pre-primary to 11th and 12th. So right now they have six schools under that, seven schools, sorry. There's a typo here. They have seven schools under the Q12 academic segment. Okay, and the plan is to scale this academic segment to 50 managed schools, and everything will be done in an asset-light manner only, where the school will be owned by someone else, and they will just provide their services there in that school, their curriculum, their teachers, and everything. Third one is the vocational segment, which I said, it provides upskilling courses for professionals. And in that vocational segment, what they have done is they have done a 50% JV with with a Noida-based company called SNVA. Okay, SNVA is primarily operates the same vocational services beyond India as well. And through this JV, the idea is to get their business beyond India, and get more business from Asia and Europe. And in future, what they are saying is this vocational segment will also get demerged into a separate company, maybe 3 4 years down the line. And the fourth one and the last one, this is a bit of a stress business. It's not going that fast as the other businesses, which is the government test prep business. In that, they want to open more centers, and this government as well as business is basically is only operating in South India only. So they want to open more centers and go beyond South India and operate it in a franchise model. Again, the property and everything, all the capex expenses will be done by the franchise owner, and company will only handle the operations. So this is about the commerce vertical. Okay, as you can see here, there are five brands which come under the commerce vertical, which are going to get demerged, and a single entity would be formed called JK Shah Commerce Education Limited. JK Shah BB Vouchers. BB Vouchers is their online platform where they provide commerce related education to commerce related courses in an online mode. Naukag is another brand which is located, which has branches in Ahmedabad. Tapasya is the managed colleges commerce, as I mentioned in the previous slide. They have 15 colleges right now under the Tapasya brand. And Logic is in, I think Logic is also in Bangalore and Hyderabad right now. Same way as like JK Shah, they have offline coaching centers. Okay, and and they want to go all these brands into, they want to grow the geography of all these brands. And what another thing they want to do is they want to roll out full courses at all of their centers. Let's say one of their centers is only providing CA and CS. Now they want to make all of the centers uh, into centers which are providing all commerce related courses: CA, CS, cost accounting, CFA, CMT, BCom, everything, right from BCom to CFA, and everything they want to cover under all their centers. These are the revenue projections for the commerce vertical and as well as the whole entity. Okay, FY26, basically it's their guidance. If you look at the commerce vertical, okay, 300, they're projecting a revenue of 340 crores for FY26 and a PAT of 100, roughly around 100 crores. And one of the reasons for the demerger is only that this business, post listing will not only be debt free, but it is right now it is generating, as you can see here, most of the EBITDA and most of the PAT is being generated by this business only. So once this business gets demerged, it will lead to a lot of value unlocking. Overall, they are projecting around 650 crores of revenue for FY26 for the entity as a whole, and an EBITDA of close to 230 crores. All of the profits, or let's say, all of the profits will be driven by the commerce segment only. FY30 guidance is for just the commerce division is their guidance is to get it to 1,000 crores. Whether they are able to deliver or not, we need to see. So this is the academic segment. They operate five CBSE schools in southern India and two international schools, two more international, which is the ICSE schools. All of them are in South India only. They have right now 5,500 students catered across these seven schools. Okay. So they are they're envisaging 25 crores of revenue in FY26, and in 4 5 years they have the target of opening, taking these seven schools to almost 40 50 schools in by, let's say, FY30. So every year they have planned to open 4 5 new schools, or let's say operate 4 5 new schools. Here is their vocational segment, which is the upskilling segment, in which they have done a JV with SNV EduTech. Here as well, they are providing a growth outlook of 25% by and by scaling the business beyond India into Asia and Europe as well. This is the government test for the business. This business has slightly been, it's not going as fast as expected, but even in this business going forward, they're giving a guidance of 25 to 30%. Okay. This is the industry growth rate. This is basically taken from a McKinsey report. which came out in 2021. Okay, and it shows that the tech sector in India itself is projected to go at to 20% CAGR going forward. Again, this is continuing from that same McKinsey report. What it said is that upskilling and reskilling, which is the vocational segment. Okay, what this report said is that in 9 out of 10 executives and managers already facing some skilling gaps in their organizations, and that demand in the market will is going to give a huge boost to their vocational segment. Here is the basic snapshot of the promoter. So if you look at the promoter is Suresh Kalapati, and if you can just do a bit of googling about him, he has a history of founding, many successful businesses in the past. Okay, in the past he has founded a software education company, and acquired acquired a US based company from India. Okay, and he also held a controlling stake in Aptech Limited. Then he found one entertainment company called AJS Entertainment. So if you can just do Google or ask to the AI a little bit, all these companies are well-run companies, successful companies which has formed in the past. So hopefully with Veranda as well, something similar can happen. Here is another important slide, which, as I told you earlier, when they are acquiring any brand, they are not changing its management or its operations. They are leaving it to the same people who are running it before. Like Race is a 12 years old brand. So they didn't just buy it and, they buy it from the founder and then started operating it themselves. No, they kept the founder in place, and they ask the founder to be with them on the team only. So every acquisition they make is basis on that only, where the founder has enough, or where the founder of the brand has enough interest to run this brand with them under their wings going forward. Here you can look at JK Shah. Here is chairman of JK Shah classes. Here is Bhagat Sriman, who founded Veranda Race. Lovelin Bhatia, he founded Edu Eka. Similarly, like this, they have done for every brand. Some of the risks now I will take you through. The one major risk here is that this industry can have regulatory crackdowns. If you are post COVID, you look what happened in China was they did a crackdown on all the edtech companies in there. So what basically the Chinese government was saying there was these edtech companies are charging students too much, and so when they did a big crackdown there. So something similar can maybe happen in India as well. Okay, and there is a huge local level competition at every place they operate a center in. Let's say let's say wherever they have a coaching center in every town or city, there is that one teacher, one another some classes running, which is very popular amongst the students. So that local micro competition is very tough in this business. That can prove to be a challenge, but I think since they have so many centers, that risk is bit mitigated by that. And wherever they are facing challenge, they can choose to close down that particular center. Another risk is that edtech businesses in India, we haven't really seen this kind of business make money for investors as yet. We haven't heard of any company which has given like created like good wealth in the long term for investors. So it could be the first time or not, let's see. Another thing is that the management is giving, like, they are dishing out big numbers, like they are envisaging 4-5x growth, 30-35% growth across all their verticals. So what you need to see is whether they are able to do the talking about the talk on is not. As Farshad said, we need, he has the AI, and the AI was able to deduce whether the management were able to meet their previous guidance or not. This is a fairly new company, so we don't have like that much of a past record. And basically, right now their revenue growth was happening because they were doing that, those inorganic acquisitions, so all that revenue was flowing in. So going forward, we need to first see where the guidance of FY26, which they have given of around 650 crores, whether they are able to meet that or not. And then, you know, we need to check year on year whether they will be able to meet on their high growth guidance or not. Last thing is, when the demerger happens of the commerce unit, which will be a debt-free unity, debt-free business, and since most of the profits are being generated by the commerce entity only right now, the parent entity won't be much liked by the investors, and you could see a lot of selling pressure because nobody wants to hold a bad business. Everybody wants to hold only the good business. Okay, then the good business here is the commerce division, which is getting demerged. Okay, so there could be a lot of post selling, post listing where just people just discarding, people are just discarding the parent entity and keeping the demerged entity. But right now, I think the valuations are so cheap in this company that we can afford to take the risk. And as the management is saying, they are going for debt restructure. When they go for debt restructure, right now their quarterly interest payment is what, 19 crores. So after that debt restructure itself, that can come down to 12-13 crores. So that's a saving of around 20-25 crores in the parent entity, which will directly flow to the pivot just post this debt restructuring itself. And, and the management is guiding that the parent entity itself will have good growth. So maybe the parent entity itself will turn around, and maybe the forced selling will lead to even more cheaper valuations. Right now, if you look at the commerce segment, with the guidance which they have given is for 100 crores, and even if you take them on their word, forget they have given it for FY26 as well. But I'm being conservative here. Let's say they have achieved 100 crores of PAT in FY27, and you give it a 20 times multiple, then itself the commerce division itself will have a market cap of 2000 crores, which is the market cap of the entire company right now. So you're basically getting the parent entity, the non-commerce business, which is the government test prep, the vocational segment, and the academic K-12 segment. All of those businesses, you're basically right now at these valuations, you're getting it for free. So risk reward right now is very favorable. We need to see whether whether the debt restructuring happens on time, and whether the management is able to deliver on the talk they are giving or not. This is the chart I told you previously. This is a pessimistic stock right now, and the charts really don't make sense. It's below all its moving averages. It's very close to its all-time lows. In fact, the IPO came in 2023, and since the IPO, it's only been a wealth destroyer rather than a wealth creator. So, looking at the charts won't make sense. We need to look at it fundamentally. The fundamental triggers are: one is the demerger of the commerce unit. Okay, the second is the debt restructuring. With the current debt is at a very high interest rate, which is 17%. When they restructure that, it will go down to 11-12%. Okay, and then the business, since they have stopped all the acquisitions now, they will look to grow it organically. So that's it from my side. Hello.
Yeah, okay. Some questions for Ankit, guys. So it's a kind of a company which is, if I term it as most of a kind of free company basically out of some demerging which is being planned and it's such a valuation. Is that the thesis we can term it as?
Yeah, basically the worst is behind. Let's assume that, and hopefully now the strengthening of the balance sheet happens from here on.
So yeah, any questions for Ankit from audience? Okay. Ankit, I think we don't have any questions for the time being. Just look for the chat in case somebody puts a question in the next few minutes.
Yeah, sure. I
Thank
will
you for
answer.
this interesting idea. And we'll move to the next presenter, Vedansh.
Yeah, yes. Just a minute. Yeah, hi Puneet, I couldn't see the screen sharing option here.
And go to the share part and it should come to you. You are the co-host now.
Just a minute. Yeah, Puneet, I messaged you. Please check this one.
That's it, right? What's up?
Yeah, I WhatsApp. Yeah, there is no option for sharing.
Vedant's, this Amar, check at the bottom beside the chat and react
Yeah, yeah.
icon. There will be share.
No, there is no option. I shared in screenshot with Puneet. Puneet, kindly check.
Okay. Okay.
Can you go to the more?
Yeah.
In more, can you get some options or not from there
No,
also?
no, there is no option there too.
It's surprising actually. For most of the people, it is the same options we are giving. Maybe as Farshad said, you have to try logging in once again.
Okay, okay. I'll try login again. Just a minute.
Manjit Tuleji, we are able to see your screen.
Yeah, hi
Yeah,
Puneet.
I am also trying now.
Yeah, I
Okay.
I joined back. Actually, there is no option. So, can you move it to the next participant? Meanwhile, I figured this one out.
Okay.
Yeah, let me see what's happening. Yeah, thank you.
Oh, yeah, Rishi, are you available?
Hello. Hello.
Yeah, Rishi,
Yeah,
you are
hi
doing
Puneet.
great.
Yeah. Can you help me with one thing? Can you share screen on my behalf? I'm not able to operate properly from laptop right now. Uh, I'll send you the updated PPT just now.
I
Give
think,
me a
no, wait, I think I need to send it to Amar. Just give me a minute to sort this out.
sure. I'll send you. Give me a minute.
Yeah, Puneet, I got it. I'll put it.
Okay, Rishi. We are putting to Amar.
Okay,
Yeah, Amar would be sharing it and you can start speaking.
sure.
Yeah, hi Puneet. It's visible now. Can I, if you want, can I start?
Okay, you can start. Oh, what's your name is through
Vedansh,
the...
Vedansh.
No. So,
It's joined from Lenovo actually.
okay, sure. I will put that as a host. Okay, let's start with you, Vedansh, first.
Yeah, just
Yes, we can see you.
yeah. Okay. Okay. Am I audible?
Yes.
Yeah. Okay. So okay. So my screen is visible, correct?
Yeah, it is
Yeah.
visible.
Okay. So the idea behind picking today's business was, we've been going through a choppy market, So a company listed recently in a bad market, so it didn't got the eyeballs it generally the company does, So the stock kept falling and kept falling and kept falling. So I was looking through the company, so and I found out that actually the business is very capable, promoters are very competent, and financials are something you would have never seen. Extremely strong balance sheet, extremely strong P&L, and extreme cash flow generation. So I thought to dig in about business. So my presentation is about a business which listed recently. Okay, so generally, if I want to summarize this business in one line, it's a proxy on India's infrastructure. And how is that? I'll tell in my next slide. So there, that government has been on forefront in launching various infrastructure schemes, from water to roads to railways to solar to river linking programs to geospatial to Jal Jeevan missions. And without the services of these company, you cannot run a single infrastructure program. So such are the critical services this company provides, from starting to the project, from its completion to analysis to tender bidding. In every stage of infrastructure project you need company services. Okay, so I've broken down this presentation into three parts. First, I'll introduce the business. So it's a little bit complicated to understand, so there's a lot of text required. So I've tried to summarize my business as in small case studies and videos, and I have attached a lot of links for someone who want to read more about business. I'll be sharing this PPT with all you guys. And second, we'll look at financials. Why this business is more, why this business has more strength than what people think will be very clear when I'll take all of you through the financials of the business. And third, we'll talk about risk, what kind of risk it has, and how, what is management doing to mitigate those risks. So we'll introduce this portion one by one. Okay. So the name of the company is Monarch Surveyors. It's one of India's top 10 engineering consultants, and I would not call it a consultant. It's actually an engineering services business. So uh, company provides comprehensive services throughout the entire life cycle of infrastructure projects, from concept to commissioning, as I was saying earlier. And I'll take you through each and every services that company provides, and we'll see that what kind of services those are. And secondly, the sectors where the company provides its services. So roads, railways, metros, town planning, geospatial, land acquisition, water transmission line. There, each and every kind of infrastructure, wherever infrastructure is required, companies' services are required. So yeah. So what kind of services they offer? Surveying and mapping, geotechnical, traffic and engineering investigation, conceptualization, design and engineering, GIS based land plan, land acquisition services. So these are a broad area of services. We'll go in detail through each and offering. Just I've summarized a broad understanding of services here. Okay. So I'll introduce the services. These are 15 services that company provides. Okay, and I'll take you through each of these services. So here's a link on company's website where companies have mentioned in very detail. Okay. So this is company's website. It's a very beautiful website. Everybody should read it. I'll attach the link. Promoters have done a fantastic job summarizing what they do in this website. Okay. So what they do is they have engineers on board. The whole employee base is full of engineers, surveyors, drone experts, and let's say government has to create a new bridge, for example. So to create that bridge, a lot of surveying is required. Okay, uska alignment kaisa hoga, from where it will pass through, what kind of resources would be required, how much timing in that project would be completed. Okay, किसको award मिलेगा, कैसा मिलेगा. तो for all that data, lot of engineering services are required to create a detailed project report. In that project report, everything is mentioned about the project. Once the DPR is created, further the government goes in tendering. So the company's services are in initial stage of infrastructure projects where all these surveys have to be done. Okay, so engineering surveys, feasibility studies have to be done. So in terrains like Jammu and Kashmir or Northeast, where the terrain is difficult, you have to do feasibility studies before you can start a project to understand that is project even feasible or not. Government will spend thousands of crores in doing a project, but if project is not feasible, then it's not worth it. Correct. So every project now which is done in difficult terrain, a feasibility studies is done. And to do those feasibility studies, you need a lot of advanced equipment, you need engineers, you need scientists, and a lot of time is spent in those terrains to do a feasibility study. So company does that. So inspection and assessment is required. So railway line will go through this part. Is the soil in that part weak or not? Railway ka jo that will train will pass, is the land behind it strong enough to hold or not? So all these inspection and assessment company does. Correct. Second is detailed design and engineering. So government में क्या है कि they have to create bridges and a lot of stuff, तो उसका design भी company makes. Okay. So let's open. Okay, मैं थोड़ा सा open करता हूँ. For example, we have opened this industrial surveys. Okay. Okay. So yeah. So here's an example. Okay. So how we deliver our services. Monarch blends aerial, mobile, and terrestrial capture methods with enterprise grade GNSS control, then funnels every dataset into a secured cloud. So they're tracking all the infrastructure data from the equipment they have, and they put that into software, and they automates routines, lidar photogeometry and utility scans into a single model, and use AI classifiers to tag equipment and safety zones. Okay, so basically, in short, they're using technology to get insights from the data, the surveying and mapping data. Okay, and they create dashboards in production environment so that government officials who are looking at the project can understand what's actually happening. And company has given that why the company has edge over its competitors. So all capture rigs, processing clusters, and industrial specific analytics modules are owned and operated by Monarch. So generally, when you look the competitors the company has, all other competitors generally outsource this kind of work, because this kind of work is technological heavy. You need a lot of employees, you need a lot of equipment. It's not easy for other companies to maintain these kind of employees and equipment, but Monarch does everything in house. So from equipment to employees, I'll take you through what kind of equipment it has, how kind of employees this have, and you can understand that why company is more of an engineering services business less than a consultancy business, as the name says. Okay. And you can see Monarch allowing crew mobilization in under 72 hours, a lot of stuff. Okay, this company is very text heavy, there's a lot of reading required, so I've attached all kinds of links for people to read. So let's look at any other services. So geotechnical investigation. Okay, so you can read how we deliver our services and where the company has edge. Okay, and they've given examples. So Pune Metro Underground section, company did 959-meter drilling, full lab testing, settlement modeling, infrastructure, tunnel bore machine selection, and lining thickness. So you can understand that anywhere inspection is required, anywhere assessment is required, anywhere surveying is required, mapping is required, company services come in place. Okay. Okay, let's move to some other services. Digital twin. So nowadays, all the government projects there is mandatory to create a digital twin relevant for a project. So for example, this bridge has to be maintained. First of all, before the bridge will be completed, a digital twin has to be created from using lidar surveys and mapping equipment, so that कि जब फाइनल कंस्ट्रक्शन हो उस ब्रिज का, देन देयर शुडंट बी एनी इशू, ठीक है। और फाइनल जब रेनोवेशन हो तो ऑल द डेटा इज ऑलरेडी विजिबल। सो all the infrastructure projects which are being awarded, a digital twin is mandatory. So company makes those digital twins for those infrastructure projects all well. So you can read all the details I mentioned here. If I start reading, it will take a lot of time. They use a lot of software, Revit, SketchUp, AutoCAD, 3D Max to create the digital twin. Okay, and they have done for Northwestern Railways Jaipur division. They have done drone, terrestrial, lidar, and 360-degree imagery used to create bridge digital twins. Okay, so you can read a lot of information is available. I'll show some videos to explain because visualization is better for this business. Okay, let's come back to the presentation. Okay, so the lot of services I've just touched upon a few. You can read for more services. Let's move ahead. Okay, these are 6 sectors of operation. So basically company has divided all its operation in 6 particular sectors. There are 15 services. Those 15 services are used in these 6 particular sectors in various domains. So for example, let's take the energy domain. Okay, in energy domain they use their, again, they have lidar specialist and a lot of technology they use to map these transmission lines across the breadth of the country. देखो कहीं भी नया ट्रांसमिशन लाइन अगर होना है तो आपको उसका टेरेन है, उसका स्पेसिफिकेशन क्या है, कहाँ से पास होगा, अच्छा जिसके लैंड पे ट्रांसमिशन लाइन लग रहा है उसको लैंड एक्वायर करना है तो उसका सर्विसेज है। तो ऑल दीज थिंग्स, जियो टैगिंग, lidar surveys, you know, plant acquisition, anything and everything that is required to execute those infrastructure project, कि infrastructure project smoothly खत्म हो सके उस चीजों के लिए all the services company provides. So for example, you know, uh, this Alakanda hydro power plant, so company did a reservoir and boundary pillar surveying supporting 330 megawatt scheme planning. So basically जो उसका बाउंड्री होता है डैम का, तो उसमें उसका उसका सर्वे करने के लिए कि दैट बाउंड्री कैन सर्वाइव और नॉट, उसका रिजर्वायर का स्ट्रक्चर कैसा रहेगा, उसका टोपोग्राफिकल सर्वे करेंगे उसको, एवरीथिंग कंपनी डज हियर. ओके, you can read a lot of information is available. I'm not going to read everything. Okay, so see, let's take this example. You know, Lloyd's Metal Energy completed 1600-kilometer pipeline route survey integrating lidar, GPR, ROW risk mapping to accelerate statutory approvals. Okay, so similarly these are 6 sectors. You can click and read. There's a lot of information available on website. Okay, so as I said, the company is recently listed, but actually they have a long history of operations. They're 26 years of operations. So in 2019 they completed 226 square kilometer of GIS mapping for NMC, you know, and in 2020 they digitized 7 lakh land records for PMRDA. In 2021 they mapped 2200 kilometers of transmission line in Ladakh. So you can understand the complexity of projects that company does. So as I said, it's an engineering services business. Anywhere where infrastructure has to be put, company services are required. Okay, so technical equipment, yeah. So how is this company different from its competitors? Is they own a lot of technical equipment. So if you go and compare companies' competitors, you won't find such technical equipment on the balance sheet. And this is almost 40 crores of technical equipment, and additional 30 crores of technical equipment will come in next half year. So company will almost own 100 crores of technical equipment in next 1 year, which is very rare for an engineering services business. You pick any engineering services business, you won't find such high quality of technical equipment sitting on balance sheet. Other competitors generally outsource it or take on rent. Okay, so they have a lot of certifications, and each of certification actually shows company's capability. Recently, they also won this certification ISO IEC 17025 2017. This basically is a certification which this is a certification. Yeah, this certification is required for doing soil testing. You know, जैसे अगर मान लो कहीं पे आपका ट्रांसमिशन लाइन जाना है या कहीं पे ब्रिज जाना है तो उसके नीचे का सॉइल टेस्ट करने के लिए NABL is accredited company for setting up a lab, in-house lab to test all that stuff. Yeah. Okay, now let me come to case study. So as you can understand, there's a lot of reading required to understand this business. So what I did was to summarize the whole business into 3-4 case studies. You know, I attached all these case studies here. So I'll just go through 1 or 2 case studies. Let's open this first case study. So recently, Navi Mumbai airport was inaugurated. So अब airport को अगर बनाना है, then there's a lot of land required, and the company was given the project to acquire all that land to construct this airport. So company did surveys, aerometric surveys, geometric surveys, उसको मैप करा सारे लैंड को, फिर किसका लैंड है उसको एक्वायर करने के लिए जो प्रोसेस है. So the company was responsible to acquire almost 120 hectares of land. Okay, so you can read here. The challenge was meeting a strict 12-month acquisition window under the Land Acquisition Act timelines required, flawless process controls and rapid mobilization. Diverse site conditions from undeveloped marshlands to semi-urban fringes demanded both satellite imagery and ground surveys. Coordinating valuation and consent across multiple agencies and thousands of affected persons risk delays. So what was company's solution? They dedicated a DGPS and satellite imagery team, delineated core and ancillary boundaries with sub-centimeter precision. So they created a custom GIS dashboard that tracked notice issuance and payment status. So basically, they produced a 16 high-resolution cadastral maps covering all acquisition parcels, surveyed and validated 5,000 structures with zero discrepancies, and demarcated 792 hectares of core and ancillary land. Completed all statutory notices and disbursements ahead of schedule with no major grievances. So this is company's expertise. कहीं पे infrastructure project काम होना, you need company services. So this is one example, and there are multiple case studies. So this Mumbai Hyderabad high speed rail company was responsible to create a detailed public report for that. This Agra metro rail project company did LiDAR survey for that. Nagpur Mumbai super expressway company again did a land acquisition for that. So these are multiple case studies. I'll send the presentation. You should go through each and every case study. So just to summarize the complete product portfolio. So these are all the projects company have done, from Pune Ring Road to expressway to industrial corridors to land acquisition, Samruddhi Expressway, coastal road, high speed rail corridor, Mumbai Hyderabad, metro rail, monorail, railways, airport, ports. Port is a upcoming business, multimodal corridors, water, geospatial, digital. These are all the variety of projects company does. Now let me come through some videos. It would be easy to understand with little bit of video. Just a minute. Okay, this will just.
The Indian Railway has initiated to incorporate 4D bridge in.
Yeah, is the video audible?
Yes, it is.
Okay.
The Indian Railway has initiated to incorporate 4D bridge information modeling for bridge inspection. This innovative approach, which combines 3D modeling with the existing bridge data like point cloud and oblique images for inspection and health monitoring to overcome the traditional inspection method, which is not only compromises on safety of the worker, but also time consuming. Northwestern Railway Division of Indian Railway has awarded the work to Monarch for digital twin modeling for inspection of railway bridges using drone and terrestrial mapper. The railway bridge number 18 is located over Indira Gandhi Canal connecting Jaipur to Hanumanghar Junction at kilometer 28.610. Ground Control Point (GCP) planning was done to ensure accurate georeferencing. GCPs were strategically placed around the bridge and its approaches, considering accessibility and line-of-sight requirements for optimal data acquisition. DGPS observations has been carried out. Traversing was conducted using high-precision instrument line TS scanner to establish a reliable coordinate framework. Using the SX12, high-resolution point cloud data and 360 degrees panoramic images were captured for documentation of the bridge's geometry, surface conditions, and surroundings. The collected point cloud data and panoramic images was processed using specialized software to refine accuracy and align the dataset with the coordinate. Using Autodesk Revit, A detailed 3D model of the bridge was created based on RDSO drawing. The refined point cloud was seamlessly integrated with the Rivet 3D model, ensuring that the virtual representation accurately reflected the as-is conditions of the bridge. A thorough analysis was conducted to compare dimensions derived from the point cloud against the RDSO specifications. Discrepancies, if any, were identified and noted. The 360 degrees panoramic views captured were utilized to visually inspect and analyze bridge member joints and supports to identify potential issues and providing actionable insights for maintenance planning. The leverage of 4D information modeling in bridge inspection will ease the monotonous inspection method, which not only compromises on safety of the worker but also time-consuming. 4D BRIM model initiative supports decision-making processes related to bridge for scheduled maintenance, ensuring safety and structural integrity, reflecting Indian Railways' commitment to modernization and safety for bridge inspection. Thank you.
Yeah, so you could see what I was trying to say. This one more video.
Aerial lidars are revolutionizing the way we survey and map the world. Traditional land surveying methods are being replaced by lidar as they offer speed, precision, safety, and cost effectiveness. Aerial lidar is a combination of lidar sensor mounted on drones or aircraft. Aerial lidar is flown over specific areas to collect data. The lidar's laser technology allows it to create a detailed topographic map. Monarch is equipped with high-resolution cameras and sensors to capture accurate and precise data. Our team of experts processes this data and creates highly detailed maps and 3D models of the surveyed area. With our advanced software and algorithms, we can deliver results in real time. Pre-flight planning is done based on the area to be mapped to decide the type of drone and lidar sensor to be used to accurately capture the data. The aircraft is flown over the designated area in a predetermined pattern, usually in grid-like formations. The lidar sensor captures data points which are then stored as a point cloud. This point cloud is then used to create a 3D map of the area. Data is processed using specialized software to filter out any errors or noise to ensure accuracy. The data is further analyzed for extracting elevation information, creating contour lines, or generating 3D models. The final report includes the results of the survey, any findings, recommendations, etc. Monarch has pioneered the use of aerial lidar in various challenging projects. We are infinity mappers, mapping the infinity and pushing the limits of what's possible. Join us as we embark on a journey to discover the limitless possibilities of aerial lidar survey.
Yeah. So there are more videos. Some of them are uploaded on company's YouTube channel. You can visit them to understand more about the work. So a little bit about the management now. So the company was founded by 6 friends out of college. So these are all the promoters and directors. You can see there are 6 of them. They are friends, and they have vast experience. 26 years of experience in civil engineering. So the company might be recently listed, but their operations has been for 26 years, and the management is extremely capable and very experienced. Next, okay, so yeah, so they came up with an IPO, and I asked management what was an objective of IPO, because companies making very good cash flows, they don't need capital. So the objective was IPO to get more experienced professional on the board. So recently after IPO, you see they have hired these people. They are IIT IM professionals, and they have vast industry experience. Mr. Harshvardhan Vijay Rani has PhD. He has experience from New Zealand, UK, Australia, Canada, 18 years of experience. Mr. Anuran Gayali, he used to work in KEC, extremely competent guy. He's from IIT. Mr. Srinivas Macha is this company's chief operating officer. He's also have various domain experience, and these are very senior professionals that company is hiring. And they told me that they're not going to stop. They're going to get more experienced professional into this company, because this is a employee-led business. You need competent individuals to provide competent services to various government and private organizations. So yeah, next. Yeah, so these are more employees. I'm requesting all of you to just go on LinkedIn and check the profile of these people. They are domain experts in their field. Mr. Santosh Desai, he gives lectures to different RDSO organizations and railway organizations on how to implement company services. If you can just check his post, you will understand what kind of work they do. Mrs. Yogita Jagtap, she's also a domain expert in LiDAR, BIM, and civil software specialist, and company has various such domain experts as their employees. Okay, so when company was listed, this is from DRHP, they had 400 employees as of 2024, and as of now they had 650. So they have been aggressively hiring post IPO, because primarily the company's presence was in Maharashtra, but now it's going pan India. So to have a presence in pan India, they need competent individuals, and you can see from these LinkedIn screenshots what kind of engineers they are hiring. So these are two screenshots I took from LinkedIn. So these are they are bidding for Inland Waterways Authority detailed public report, and they need team leaders, finance expert, traffic experts, structural engineers, geotechnical engineers with tens of years of experience. And this is the kind of hiring spree the company is going on. On right side, they are increasing their presence on railway side. So railways engineers, traffic engineers, CAD engineers, surveyors, all kind of hiring is going on currently in the company. Okay, a little about details about IPO. So company raised company raised 93 crores in IPO. Out of 93 crores, the capex was of 32 crores. So this is equipment. So company will buy 32 crores of equipment in the next 6 months. 30 crores was for working capital, and 22 crores was for general corporate purposes. But the thing is, out of this 93 crores, almost 80 crores is just unutilized and sitting in bank fixed deposits. And I asked management about that. They said that as and when the money would be required, they'll utilize it. They don't have immediate need to require the money. So all of this money is sitting in fixed deposits in a bank. Yeah. Currently, they have 520 crores of order book. And in H1 FY26, they received new orders worth 186 crores. So you can understand that the momentum is strong in this business. Okay, now I'll come to financials. Little bit, I'll take you to the screener. Yeah. So just a minute. So if you look at financials, first P&L, you can check companies' operating margins are up north of 30%, and they've been growing decently. There is no interest, as there is almost negligible debt. There is very little depreciation, and almost all of the EBITDA is coming to bottom line. Next on balance sheet. So just a minute. So if you look at balance sheet, company has 200 crores of reserves, negligible debt, 25 crores of liability, which is nothing but bank guarantees, trade payables and some stuff. Fixed asset, this is 40 crores of equipment that company has, and it will purchase another 30 crores of equipment. And this other assets that company has, 138 crores, this is fixed deposits and bank guarantees again. The IPO money, this is IPO money. Yeah. Next, let me come to cash flow. Just a minute. Yes. So the most interesting part of this business is cash flow. Generally in any government business, the cash flow is a real issue. But here it's actually exactly opposite. You would see what I'm trying to say. Look at the cash flow statement. So company made a cumulative PAT in FY 22, 23, 24, 25 of 78 crores. So this is total of 4 साल का मैंने PAT जोड़ दिया, 78 crore was the PAT, and out of 78 crores, actual operating cash flow was 71. So 90% cash flow conversion is happening in this business. Why? Because there is no inventory required. Payables are very less. and company is able to get their company is able to get their billings very fast. The reason is promoters told me that जो भी project होता है they have multiple milestone, ठीक है. तो for example अगर land acquire करना है तो उसके 12 milestones are there. So as and when the milestone is completed, they get their funds fast. The reason is because all of the company's services generally are done before the project is awarded. So this is pre-awarded services company provides. तो गवर्नमेंट का पुश रहता है कि फटाफट डीपीआर है या टेंडर डॉक्यूमेंट है वो प्रिपेयर हो, उसके बाद they can bid out the project. So government is also in hurry to complete those services. That's why company never faces any cash issue. The fact that they converted 90% of their profits in last 4 years actually tells that how strong the operating cash flows here are. Then you won't find such operating cash flows in government businesses. Okay, now coming to valuations, it's available at single digit multiple, 8 times earnings current, 6 times earnings 6 months forward, EV EBITDA 5 times, order book to sales is 3 times. As I said, the company listed in bad market, so it has less eyeballs, and that's why it got overlooked. So for the quality of services it provides, for the quality of financials it has, the cash flow conversion is awesome, the balance sheet is great, it's available at through which single digit multiples. Yeah. So lastly, I want to touch on risk part. So a lot of risk here. First one being that it's a newly listed company, so long-term execution capabilities has to be seen, track record has to be seen, and a lot of stuff required. Secondly, high dependence on government agencies. So as I said, company provides infrastructure services. So most of the infrastructure in country is built by governments all across the country. So 60 to 70% of the business comes from government agencies, but which is not a problem because cash flow conversion is good. So, but that's a risk. A third risk is so as I said, the company provides technological solutions. So 75% of companies order book 75% of companies order book come from QC based standards. These are quality control based standards. Here आपको जो है L1 के बेस पे ऑर्डर नहीं मिलता है, आपके टेक्निकल मार्क्स के बेस पे ऑर्डर मिलता है. So 75% of the business comes from there. So risk this shows company's capability, but risk is there कि भाई quality control है, तो you have to constantly invest in new technological equipment and you have to constantly hire domain level specialists to maintain this kind of order winning. Okay. Third company is primarily a service provider. It's not an OEM. It's not Google or Microsoft. It's more like TCS. It takes technological equipment and services from various OEMs and bundle it together to provide a service. So if there is a big order which government has to give, so company might face a little bit competition from OEMs. Okay. So fifth, company has exceptional working capital cycle. Debtor is less than a month, which is great, but this can deteriorate in future because government is government. Six, attrition risk. Current attrition is very low, but in this business, as it's an employee-based business, there can always be an attrition. Seven, so historically, the business was 90% of the business was from Maharashtra. But after IPO, they've been expanding. Recently, they won 100 crore project in Gujarat. They won some project in Saudi Arabia for railways. So they've been expanding, but currently majority of revenues from Maharashtra, so that could also be a risk. Okay, eighth, significant on-ground project activity is required. So disruption like COVID can put halt to companies' business. Ninth, companies dependent on critical software tools, technological upgrades, replacements. So any obsolescence of technology could be a risk. And 10th, there's a high client concentration. Almost 80% of revenues come from top 10 government clients, which should improve as companies expanding all over the country. But it's a risk as for now. Okay, this is a little bit about me. I'll share this presentation. If you want to follow me, here's the detail. I'm mostly done with the presentation. If there's any question, I'm happy to answer.
Great, Vedansh. I hope a lot of you would have interacted with Vedansh on Twitter. He keeps finding such companies, and this is one of the good examples. Little bit out of the league from ALD, but I think this is one very good company to look for. Thank you, Vedansh. Anyone have a question for Vedansh? Please go ahead.
So they're expanding across India. So who are their competitors and how do they want to get a business? Because having in one state and getting into all over India, it's not so easy, right?
Yeah. So actually, I met promoters 2 days ago in GeoSmart Expo. So many people I asked the same question. So they told me that so all state government have same problems. So जो problem Gujarat में state governments का है, that is same problem in Bihar, same problem in Maharashtra, same problem in UP. There is no difference. The only difference was कि company had a bandwidth that it wanted to have a good competent employee base before it wanted to expand. क्योंकि they told me कि अगर हम लोग पहले expand कर लेंगे then work get deteriorated. So अभी हमारा target है कि we complete the project before timeline. But if we expand too fast and we don't have capable employees, the project might get delayed. Uske liye, so they maintained a discipline. At first, we will hire good people and then we'll expand. So that's their strategy. They told me the work is similar. So the kind of work they're doing in Maharashtra is the kind of work Gujarat will have, the kind of work UP will have. So there will not be much problem when it comes to expanding. Yeah.
Another, what I'm hearing news for next year, government might reduce infrastructure spend, right? So will that impact them? Because that's what the news
Yes,
I'm
yes,
reading.
that's a very good question. So first of all, government never reduces infrastructure spend. It's always the growth that goes down. So this year budget may grow 20%, next year budget may grow 10%. So absolute amount of infrastructure spend doesn't never come down. Point number one. Point number two, what is happening is, if you look all the services that company provides, in a sense, it actually improves the efficiency of the project. So government has realized that to complete projects in a timely manner and cost effective manner, you have to have more of these services beforehand. So in a sense, if government even if they slows down infrastructure spending, which they won't, but even if they don't, the amount of services required is going exponentially up, because government has realized that these kind of services are important. अभी तक ये सब services का इतना use नहीं होता था, but now they have realized कि भाई you have to do all the surveying, mapping, DPRs, and you have to do all of this stuff beforehand, so that whenever the project is executed, timelines are meted, cost controls are met. So demand of company services are ever growing. Yeah, that's not coming down.
And which are their competitors and which all states they want to expand first?
Yeah, so as I said, they operate in 6 different sectors. So every sector has their own competitors. So in roads, there's AECOM. In railways, there's RITES and IRCON. There's engineers in India in some sectors. In geospatial, there is Synces and Genesis. In water sector, Synces operates. So in each and every particular sector, they have different competitors. Yeah.
No, which states they want to target first? Because
Yeah, so
every state.
yes, so basically they want to target, see, wherever the GDP is higher. Okay, so from Maharashtra, Gujarat, UP, Tamil Nadu, so they will target first those states where the infrastructure spend is higher, and with time they'll move on to the other states where infrastructure spend is relatively lower.
Okay, thanks, sir. Good presentation.
Yeah, this was my first presentation, so I was a little bit,
No, you did a good job.
Yeah, I'll share this PPT on the group if anyone wants to, because there's a lot of text here and it was impossible for me to read all through the text. So you can read through the text to understand more about the business.
Yeah, Vedansh, I will share compiling all the PPTs of all the ALD, so need not to share separately. Okay. Any last question for Vedansh?
Yeah, just one question. Yeah, thanks, Vedant. It's a great presentation, and I think Monarch I was tracking, but I didn't buy. Who is the actual competitor? Like, the sector is really promising and doing good, and there must be some competitor already in the market, right?
Yes, sir, there are a lot of competitors, but every sector may there are different competitors. So what promoter told me that generally companies operate in one or two sectors, but they are operating in multiple sectors. So for example, roads may there is a company called Dhruv Consultancy that's listed. That's a competitor. AECOM is a competitor. Secondly, they told me कि water sector में river linking projects are हैं, Jal Jeevan missions में Synces Genesis is a competitor. Somewhere Google is also a competitor. And actually, I'll share you just let me open. I have a map. Just a second. Competitor map. Just
Because I'm in engineering company and I've been seeing all this, like, so AECOM is one of my competitor as well.
Yeah, so you can look at, can you look at this map? I'll zoom it. So I'll share this map also. This is a map of all the companies that are in geospatial sector across the sectors and across the different domains which are companies competitor. So if you look, Monarch is here.
Sorry, we can't see.
Just a minute. It's very dense one. It's just...
No, you have to share and point to that screen again, Vedansh.
Okay, just a minute. Can you see now?
Yeah.
Yeah, okay. So this is a map. I'll share this map on the group. All the competitors here are listed, So there's bifurcation by sector and bifurcation by services. And Monarch is sitting here at the down. Let me just open. Okay. So you can like, this is Monarch, so and the competitors that Monarch has in particular sector and particular service, all the competitors are mentioned here. Secondly, for another service and then another service, everything is mentioned here. I'll share this PPT also. But yeah, her domain mein there are different competitors. The company's expertise is that it has a lot of technical equipment that other competitors outsource, and it's on hiring spree of engineers and scientists, which basically improves the quality of their work. So that becomes their go-to in QCBS tender, where the tender is allotted based on technical marks, not on L1 and L2 basis. Yeah.
Okay. Thank you, Devans.
Okay, thank you, Vedansh. We can move to the next presenter now. Rishi, can you see if you can see share the screen?
Yeah, sure. I'll do.
Amar.
Perfect.
Yes.
I also can share the screen if it's fine. I mean,
Yeah, fine. I think you can go ahead with this.
Okay. Yeah, hi guys. This is Rishi Kothari this side from presenting this company for the first time as a whole. I've been joined ALD for I think ALD 6.0. So this is the second session I'm attending. I joined via reference of Mithun, and looking forward to this. So the company
Rishi,
that I'll
Rishi.
I'll share it.
So your voice is echoing. Maybe other device you might have to put on mute or something like that.
Okay, now is it okay or?
Yeah, better now. And now you can share your screen.
Perfect.
Yeah.
Visible?
Yes. Go ahead.
Okay, perfect. So one thing that I observed while throughout the sessions that we've been attending for ALD 7.0, I mean majority of the company comparatively were auto and auto ancillary services, and including me. So it seems that there's some sort of tailwind in the industry that still needs to be tapped on. Of course, we have seen the rally of auto and auto ancillary for quite some time, but we still think that there's some sort of potential that still need to be untapped, right? And this is where the company like Pricol came into my radar. And I mean, the basic thing is that Pricol is the business form. Pricol is more into manufacturing of instrumental clusters, and and apart from that, is it into the braking systems and as well as precision products. And this is the product portfolio of the company, and this sort of product shows that diversified across players that they have in the industry, right? So on the dashboard front, they cater to every sort of player, whether it's into electric vehicle, whether it's into commercial vehicle, whether it's into any sort of passenger vehicle, any sort of product, right? So as and when the industry evolved from normal, a normal commercial vehicle, engine based, the IC based engines to EV, these guys also made a bit of shift on that so that they can be in the be in that front where they can cater to the latest changing in demand in the industry. And apart from this, they have into ACFM segment, which is into more into anti-braking system, pumps and all. And the third product line is the precision product, and that's where they did a sort of acquisition some time back to penetrate more in the sort of product. So one thing pretty much intriguing for me for this company was the type of customer range that these guys have. So they cater to more or less every sort of segment, whether it's two-wheelers, passenger vehicles, tractor of vehicle, industrial, electric vehicles, commercials, right? So if at all there's some sort of slowdown in any sort of industry that we look at, this company generally will able to balance their thing because compared to the all other players in the industry, right? So let's say, for example, we all know that tractor industry per se is pretty much cyclical in nature. Why? Because of the all agriculture demand seasonality effect, right? So if at all the agriculture demand in the industry is good, tractor industry in general does good, right? But if at all there's a slowdown, these companies gets affected, and similar to other the factors for the industry plays as well. So, but this company is a bit prone to that. Why? Because they have a diversified customer base across segments, and this is the snapshot of what sort of customer base that they have. And this is the current revenue mix. Of course, the company's foremost revenue comes from the dashboard instruments and accessories, and post that they have oil pumps, chain tensors, and others. But most of the revenue that was coming from was accessories, dashboard accessories, and all that. But if I again go back up, now more or less they are diversing or focusing more towards the ACFMS segment as well as precision products. And in terms of the revenue mix geographically, 92% comes from the domestic market and 8 to 10% comes from the international market. On the current management front, this is the quick snapshot who exactly is running the business. But when I was going through the detailing of the management, everyone more or less associated with the company for more than a decade, probably more than 15 years, I would say. They're all running this company for quite some time, and they all have good industry expertise as to where exactly they want to head the business. So they have a stable management in terms of running the whole show. So this was a key product launches that they have done it for quite some quarters now, which more or less we can see of course most of the product launches is more into the dashboard side, because that's where their more business revenue is coming from. But one quick thing in this is that the revenue that they've been going from the dashboard thing, they're also trying to cater to the electric side of the business as well, which shows that they're pretty much shifting their focus from a normal IC based engine products, or the two-wheelers or four-wheeler, what are the first vehicle segment that they are into, shifting from there to the electric side of as well, so that they can cater to the latest changing demand in the industry. So that's sort of snapshot that they have. And apart from that, they're also been launching the products. Apart from that, they are pretty much increasing focus into the other two segments that were discussed. So this is this snapshot shows what sort of product that it's comparable to us compared to the peers. So instrument cluster we see Pricol, Mindacor, Vairag Engineering, and Suprajit Engineering. These are the more or less competitors in the industry for them. And apart from that, braking systems, they of course have drum brakes and disc brake with ABS. Endurance Tech, Pricol, and Bellrise are the competitors that we can look at compared to this company. And apart from this, in terms of interior, if I say interiors, we have Lumax Auto, SJS, Pricol, Shriram Piston, Bellrise, Lumax Industries, FIEM, Ondo, and pretty much a cluster of highly competitive industry. So on that basis, if I see these are the some common players are being watched in this industry or the product that these guys are into. So if at all I want to compare on this front, of course, as we discussed, I mean most of the participants also discussed that estimates is a part of it, not the whole game, right? But if at all we want to compare on that front, Pricol we would compare with Uno Minda, one of the big industry leading players. Then we have Endurance Tech, Gabriel, Bellrise, Mindacorp, Vairag Engineering, and Sanada Tech, right? So in terms of the growth target that these we have been able to look compared to peers, is that a company will grow at a CAGR of 30% plus. And where exactly this growth will come from? Of course, the main industry main growth for the company is of course the cluster one, the instrument cluster. And apart from that, the other driver is the interior part, vehicle interior, and the ABS brake systems. So if at all, I mean, in terms of the government regulations, by January 2026, all the two-wheelers vehicles have the mandatory to implement ABS braking system for them, which will help companies like Pricol to expand or have a good demand in the industry for their products. And this is the growth target by other companies as well. So right now, if I see the massive growth that we are looking at is coming from Pricol. Other are on an average of 15 to 20% growth rate. But Pricol is the industry, or is the player that is in the industry that has been able to show this sort of growth rate, right? And in terms of valuation, if I compare, of course, it's not trading at a very, of course, it's not trading at a very cheap valuation per se, if I say. But if you see at the competing level, other company leading competitors like Uno Minda and any other Minda Corp, they're all trading at 70-80p, which is on an ancillary basis, it seems too high for the competitors. But that's how the industry in the Indian stock market is being valued, at least on the auto ancillary front. So Pricol on a current level, it is right now, though it is 46 based on FY25, but on a current P it is trading at 38, which is also a bit higher. But in terms of the growth that the companies are targeting, it seems that eventually it forward might eventually get discounted, right? So that eventually in forward basis it might look a bit cheap. So that's the valuation front, and also in the ROE ROC level, they are going to see improvement. Why? Because of the expansion that they are doing in terms of the other two product lines, the other two segments, I would say, and that's where they think that a bit of higher margin that will kick in for them, which will directly or indirectly will push their ROE. Now comes the industry landscape, why exactly what's going to happen and why the Pricol as a company will benefit. I mean, of course, the two-wheeler revival market, domestic two-wheelers set to surpass a pre-COVID high. So domestic two-wheeler industry set to surpass just based on the graph, if you can see. So on the graph basis, FY19 we had a peak of 21.2. Of course, the post-COVID, post that what happened, COVID hit, and that's where the all sales and everything got hit. But it's again after FY22, it is again on a revival basis on the industry front, and that's where we think, and that's where pretty much global. Well, on the industry front, the people are expecting, or the industry experts are expecting, that it will touch 30 million units by FY31, which is a good tailwind for a company like Pricol. And this the premium mega trend, of course, the structure shift towards premium motorcycle and SUVs increasing in the value of component vehicle, directly benefiting supplies advanced features, right? So this company is not just cater to the normal motorcycles or any sort of normal vehicles, they also cater to a bit of premium segment as well, which will increase the per content value in term for a vehicle, which will of course benefit that, because this company keeps on renovating in terms of the product that they come with, and that's where they think that they'll help in terms of the financials or in growth targets that they have. Now the third comes the multi-powertrain future. Rapid adoption of EV, CNG, hybrid is creating new content opportunity. And Pricol's EV agnostic portfolio is key advantage, as discussed earlier. As and when as the industry shifting from normal ICE based engines to hybrid to CNG and to EV, this company is also adapting the same format for themselves. This will more or less, as and when the industry shifts to the EV side, this company is already equipped with that sort of industry demand to be catered. So they're not just catering to the one segment of the business; they're catering to different side sort of systems across the industry. Now comes the investment rationale. Why exactly this company? I mean, the market potential and deep OEM integration. So domestic market share, if I say, Pricol commands 40% plus in the two-wheeler cluster. Of course, instrumental cluster we are talking about. In a core product, which has which with the revenue terms, 50-60% of the revenue comes from this business, and creates a high barriers to entry for them, for any other competitors in the industry. So the market share basis, two-wheelers cluster is 40% plus, market share in CV and off-highway cluster 80% plus, and market share in high-growth two-wheeler TFT cluster, that is 80% near to that. The go-to supply for leading OEMs. So it's a critical partner for every major OEMs in the industry. So as discussed earlier, it's catering to every sort of industry segment, whether it's two-wheeler, passenger vehicle, commercial vehicles, off-highway, or any sort of other segment. So they are having a good partnership with this sort of players in the industry, and that's where we see that there will be stable customer base for the future. So there's no sort of product, customers revenue concentrated risk that they have, it's pretty much diversified among the different players in the industry. So let's say, for example, if any big player decides to discontinue that sort of business with Pricol for any sort of X reasons, this company won't be affected that much because no sort of revenue concentrated mix coming from any sort of one player in the industry. High switching causes, of course, the critical nature of the common like instrument cluster, fuel pumps, disc brakes involves leading OEM approval process, ensuring sticky customer relation. So this is one of the advantages for a company like Pricol, and as well as the disadvantage if at all they want to tap in any new customer, right? Why exactly is the case? So any OEM that or any big players in the industry, let's say we take it Tata Motors or Bajaj or any sort of company in the industry, before having any sort of supplier with them, they first go through a lengthy process of all the AEM approach. So any sort of plant that they set up, so it should be pre-approved by all the critical all the customers which are leading players in the industry. They should be pre-approved by them. Based on that all approval process, the client generally does not go just based on one sort of small mistake that company makes, right? So it's a long-term process or the long-term client relationship that they maintain. And if at all that is some sort of, until there's some sort of huge thing, a huge bad thing happened with the company, that these leading OEMs are pretty much sticky with the customers thing. So it's very hard for any sort of big client to leave the company in terms of the product that they're offering, but it's sticky in that sense. So that's what's a stable customer based business for any more or less any auto ancillary business. So now comes the pillar 2, strategic accelerate expanding the growth horizon. So Sundaram auto component plastic mold business significantly reduced time to time and increased content per vehicle with key OEMs. Like, so this was so Sundaram Auto Components sold its plastic molding business to Pricol in January 2025. This actually reduced time to market and increased content per vehicle. So this was kind of a for them to enter the interior business, right? And that's where they realized that this will help them increase the content per vehicle. And this was kind of one of the game changing for the business. And that's where I'll also on a quick update recently on the latest con call. So this business was actually generating a margin of around 6.3% since till January 25, till the company acquired this plastic molded business from Sundaram Auto. But suppose that in the latest business, the company is actually generating on a standalone basis 9% margin. So this shows that the integration of the current existing business with the new one. So the sort of synergy that they are able to make on the cost front as well as on the products that they were offering, right? And they think that on a sustainable basis they'll be able to take it to 10% margins, right? On the other growth driver, what we see is the disc brakes. As discussed earlier, as the mandate of from January 2026, all the two-wheelers have to be ABS brakes mandate. This companies will be one of the beneficiaries, so that the demand for their product will actually increase. So this has a significant market opportunity in the industry. So of course, this enhanced profitability, how? Backward integration. So the vertical integrated process and technical license agreement with BOE to localize opting boarding for TFT clusters will improve cost, economics, quality, and lead time. So Pricol actually acquired Sundaram's auto injectable business, 6 new facilities with 218 plus machines, tier 1 clients, helping them cross-selling opportunity with Hero Bajaj. So they already had existing businesses like existing clients like Hero Bajaj and Tata Motors. So this sort of business is actually being integrated for them to cross-sell this product with the existing client base, resulting in increasing the content per vehicle for them. Now comes the future-proof portfolio and the industry mega trend. So powertrain agnostic by design. So core product is of course information systems and disc brakes. These are both used in IC and electric vehicle. Companies already a key supplier to TVS iQube, Bajaj Chetak, Hero Vida, and Tata ACV. These are all EV products, prominent EV products from the industry leading players, and companies actually selling the dashboard, the instrumental dashboard to them, also the disc brake as well. So this shows that this sort of thing. And of course, adding to this thing, company recently also announced that they have a we have a new wins from Aether, Hanon, Active, Autoliv, and Schneider's for their products, right? For the existing products. So this shows that the penetration of the across customers is increasing. Capturing value from premiumization, the shift from analog to digital or TFT cluster dramatically increases the content value. Average selling price for digital cluster is 3x, 4x, that is of a mechanical one, with a path of 2500 ASP in 2-3 years. So not from a normal analog thing, this is actually 3 to 4 times higher in terms of average selling price, which increases the revenue mix. In terms of increases the revenue share and as well as increases the margins for them. So of course they have healthy pipeline for new age products on a validation. So one thing that's pretty much intriguing for companies is the company is on a path of every time renovating something new, right? So whether it's in terms of the existing products that they have, and also trying to define new things in the industry that they are into. So they are not just sticking with one sort of product that they have, having an industry leading share, but they all keep on innovating to see whether they are able to increase per content per vehicle for themselves, and so that they are able to cater. So they're able to have a great relationship with the customer, so that it becomes a bit more sticky for a client to leave them, right? So that sort of thing that they target, and that's why I've been keep on doing with innovating the products and all that. Now comes the key risk part. What exactly can result in the growth targets that the company has given, or in general cannot fulfill or does not fruitful for them. So dealing with launching price. So any sort of, so of course, end of the day, if the client per se is not growing, or if at all there is some sort of delay by the clients, company like Pricol gets affected, because they're pretty much dependent on that front. So delay in any launch pipeline of OEM results in overall earning hit by a company for a company like Pricol. So any sort of new product launch, and the other risk being delay in new product launch for Pricol. So delay in launch of new product offering by the company could lead to loss of market share and affects the future growth of the company. So company has several new products such as e-cockpit, battery management system under evaluation, and trials with the prospects OEM currently. Failure to receive approvals for these products could actually impact the future growth outlook. So company has to keep on renovating. Of course, the company has already proved that they keep on renovating the products that they have, but they have to keep on doing that just to maintain the market share in the industry, and we have that content per vehicle for them to sustain that sort of growth. And of course, the supply chain distance is something that I think more or less it's an industry-wide thing for any sort of player in the industry, in the auto ancillary space. The continued geopolitical tension between US, China, and all sort of it is resulting in a disruption of products like semiconductor displays and other electronic components. This country, supply of rare earth magnet as well, resulting, because these are the products actually being critical for any sort of auto ancillary, especially like Pricol, which uses this sort of product in instrument clusters and all sort of way. So any sort of disruption from supply for these products in the industry can result in their growth that they have given, that they're targeting. Now, of course, the overall auto industry slowed down. So, of course, the GST rate rationalization has actually boosted consumer sentiments, and this helps a lot. But if at all there was no sort of GST rate rationalization, and so this could affect the auto industry per se, and for any sort of job losses, other export facing sector could impact the demand for automobiles in industry in general. And apart from that, any sort of heavy rain, floods created a large scope. So this sort of factor is pretty cyclical in nature, as discussed earlier. So this actually affects any OEM based out for like tractors and any sort of other commercial vehicles, which could affect based on the agriculture crop demand in the agriculture crop growth in the industry. So rural demand is pretty much also thing that can actually impact their growth. So on a technical view, actually I'm not expert person. For this I actually took a help of Mithun on this. So on a technical level, chart is actually on a very momentum basis. So trading about 20 DMA, 50 DMA, and 200 DMA, which acts with price volume action as well as breakout volume. So stock is actually in momentum, and we can see that there's a strong support level at 568 to take anyone who want to take an entry and sort of pick. Yeah, so that's it. I actually was not able to put the bull and bear case for this company. I'm so sorry for that. But yeah, this is it from my side. Also, just to give you a quick update on the latest quarterly call that happened. So on the as discussed earlier, so injectable mold business actually is been doing good for the company. So before acquisition the margins were 6.3%, but now they have a margins of 9.08%, and they're targeting for 10 to 10.5%. And of course, new wins from customers like Aether, Hanon, Autoliv, Schneiders, and advanced stock with companies like Hero, Honda, Bajaj, and Tata Motors for this injectable mold division products. And apart from that, capacity is close to 94 to 95%, and the company is actually acquired an adjacent land and is on the approval phase to set up a new plant to increase the production for the injectable mold business. And apart from that, company is all anyway targeting 250 to 300 odd crores every single year in terms of for next 2 years for in the terms of capex, which will have both for the core business as well as for the acquired business. So on that front, and apart from that, capacity utilization for other ACFMS is 80 to 85%, and DICVS post post sort of expansion is actually utilization of 70 odd percent. So yeah.
Yeah, great, great, Rishi. So any questions for Rishi from the audience? Yes, Somnath, go ahead.
Sorry. Great presentation, Rishi. So I'm invested in this company from few months back. So I have two queries mostly. So regarding the growth perspective, right? Which one you are looking at mostly? Is it the ABS segment growth that is coming next year, or are you looking for the Sundaram Auto 2x sales in 3 years that the management guided, or are you looking for the capex that 250 crore this year and 300 crore next year?
So the growth that I'm expecting to full start implementing for the company from next year is the core business that they're into, the instrumental clusters, right? Because that sort of company segment is actually getting approvals from the EV side of business clients as well as from the existing IC based clients. So that will
the DIS system you are talking about, right?
Instrument clusters, yes, the dashboard.
Yeah, yeah, DIS.
Yeah, exactly. So that sort of growth will actually coming from that segment first. Till the time the other segments like in injectable mold business, which actually is going to anyway running at a 94 to 95% capacity, the new plant that will be set up will actually start benefiting from next year per se. And also the ABS system is also one of the other growth factors that will start happening from next 2 quarters or something. So yeah.
Yeah, mostly next year.
Yeah.
So yeah, so ABS system was what I was betting on. Yeah, good to know that DIS also growth you were looking into. And second question is regarding antithesis pointers. I have few. So one is the attrition rate, which is not good if you see, and in the past last few quarters. And second thing is the semiconductor impact that happens, like 5% they told on Q3 it will happen. So any views on that?
Yes, so the company actually was pretty much open while having the latest earnings call. So they said that our Q3 won't be in general. It's an industry that Q3 is not as strong as Q2, right? But I think that there's a bit of two things to it. This first thing, management was pretty open about it, but I think as because of the early Diwali and sort of Navratri season, this Q3 can have a bit of good impact in terms of the revenue, right? And because of that, Q3 could be weak. And apart from this, of course, the issue of semiconductor, which will be is still an issue because the chip that actually the issue that the management actually addressed was I think there's some sort of issue related to I think Nexperia issue, that is actually the chip which is used for the dashboard. That there's pretty much right now they are pretty much cautious that they'll get impacted, but they're not able to say how exactly that impact will be there with them, because they're more or less focused that they're trying to diversify the supply, but I think more or less it's been dominated by China itself. So any sort of relation disruption happening with China can result in disruption for the product, which I think is across industry. Every other player is going to face it. And
Yeah,
I think
thank you.
I did not get the first question that you said.
No, first question was regarding the three levers of growth, right? Which one you were betting on? ABS segment, Sundaram 2X sales in 3 years, or the disc brakes which gear 1.5 years from now it will impact?
So Q3, which I think that I think is already addressed, but Q3 I think which will be weak for the company or overall industry per se. I think GST rationalization can reduce a bit of impact for that, but if at all the bit of weak numbers come, I think could be a good addition for this company from bottom, if that's the case happens with the company, because overall on long term trajectory basis, company I think is a good company, like good company to have in the portfolio, because
Yeah.
the way they are growing in terms of different segments that they're into. And I think I won't be surprised if at all eventually they keep on expanding in the new segments to increase the content per vehicle for them.
Yeah. Any comments on the attrition? I forgot to say.
So attrition per on the management level?
No. Company employees.
No, I actually haven't got that deep into
Okay. Oh, okay.
check on that.
Thank you so much. Very nice presentation.
Thank you so much.
Good to know I'm invested.
Yeah.
Thanks. Bye.
Okay. Any other question for Rishi? Okay. If any other question comes, put on the chat for Rishi. He can take it from there or in the WhatsApp group. That would be better. Thank you, Rishi, once again for your presentation.
Thank you so much, everyone. Thank you so much for giving the opportunity.
Yeah, and that brings us to the conclusion of ALD 7.0. So we have gone through around 20 companies, I believe. I think we have got good 20 ideas to look for and understand it and take it forward. If we understand it, we'll build our conviction and carry it on. But don't just buy randomly, as I said earlier also. So I have also shared the feedback form for the presenters for today in the WhatsApp group. Please go and rate the presenters. There would be presenter award also. At the same time, the people who might have missed this, please look at the recording in some of the sessions which they missed. That would be helpful. So before closing, I would like to thank all the presenters and the audience that make it successful for us. And this is a journey we have started 2 years back and going really well for us. I think some of us started from ALD1, Amar, Pankaj, few others also. So thank you a lot to all of you who continued to come and present along with me. So without you, it wouldn't have been possible for me to take it up. Thank you for this. Yeah, any last comments by anyone? And then we can close.
Only one point here, Puneet, this is Amar.
Yeah.
We covered 19 companies. I thought you were going to present the third one and make it around 20.
Okay. So maybe 19, I think. Then Satish was supposed to present, but he has to travel, so he could not join.
Yeah, okay.
Maybe 19 it was, yeah.
No, I wish it was 20 only, but I was hoping for a third company from you, Puneet, today.
Third was Sri Refrigeration. I presented much earlier.
Yeah. Thanks, Puneet.
Puneet, when is the ALD?
Wow.
This is a good one.
Don't put that pressure, man. Get some time, understand this 20, and then maybe in 3-4 months we'll come to the another 20.
I think one very good video. I think it was very nice presentation. I attended for the first time. I think everybody put their heart and soul to present. So I think thanks to everyone.
Yeah, and because see, as an audience, you make it more beautiful, right? By asking questions, by interacting with those people. So it's a both ways, basically. Yeah, then I think we shall conclude this, and I will work on the presenters award and the quiz awards as well. Please fill the forms on the feedback, and then we'll meet again. Thank you all once again for making it up all 3 days. Any feedbacks, please share it with me personally. I would take it up for the ALD.
One request, since Farshad is on top, give him a special award and keep him out of others competitors. So
Sure.
I think that will be fair enough.
Yeah.
Yeah. But the first time presenters are also too good.
Yep.
Yeah. Thank you.
Okay. So
Thank
thank
you.
you. I'll be closing it. Bye, guys. Enjoy your weekend.
Thank you all. Bye.